Hi, I'm Wendy Whitmore, the Chief Security Intelligence Officer at Palo Alto Networks, and you're watching Taking Stock.
The very first short-term interest rate cut by the Federal Reserve in 2025, bringing with it just 1 day later, my friends, fresh all-time highs across the major market indexes. It is a comparable story as we head into the close on this Thursday. I like to call Thursdays mini Fridays. It's kind of the energy we have down here on the trading floor of the New York Stock Exchange. And on this mini Friday, watch out, folks. Don't call it a comeback. Look at these all-time highs we are expecting into the close for the tail of the tape. Comparable story for the NASDAQ Composite, the S&P 500, and the small caps, the Russell 2000. A day for the history books. We'll get to that in just a second. Welcome to the show, one and all. This is Taking Stock. We are just moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. They're hyped up. Come on, you're hyped up for that bell today. I'm your host, J.D. Durkin, policymakers at the FOMC. Just this time yesterday saying they see not one, but two interest rate cuts remaining for the rest of 2025, but only one interest rate cut, says the Fed, for 2026. Investors shaking it off. The risk-on trade back here in full effect on Wall Street, about 40 seconds or so from the ringing of the closing bell. Fans for the cure. Here to do the honors, we've got Dion Pouncil of Hybrid Advisors on deck to talk all about the Fed in this history-making day for the markets. And with that, my friends, it's time for our favorite tradition here at the NYSE. Time now for the ringing of the one, the only closing bell. And as I like to say here, Todd, you always got to wait for the three gavels to come down. Sometimes I start talking a little bit too early. One for the history books here for the S&P 500, expected to finish up about 0.5%. The Dow 30 up 0.2%. The New York Stock Exchange composite up 0.3%. And the small caps, the Russell 2000, up 2.5%. That best its previous top all-time high close going all the way back to November 8th of 2021. We love to see that rotation when the small caps get in on the party. Dion Pouncil joining us here from Hybrid Advisors. That's your mark, my man. Thanks a lot for being here.
Yeah, my pleasure.
Of course, I'm going to give you here now. I don't usually start with a fit check for my guests, but Nike is a great New York Stock Exchange listed company. Who are you wearing, my man?
So these are some custom Dior and Nike collabs.
Okay, I like that a lot. Now talk to me about Nike's shares did trade down fractionally on the day. Look at this big boy. That's a lot of green up there. What are you seeing in the markets these days?
Yeah, so with the rate cut yesterday, risk on, and a lot of people are trading, right? So a lot of people need to know that trading and investing are different, and so the volatility is good for traders. One. Two, for long-term portfolios, it might be a little bump in the road, but you're playing it for life. You're looking for generational wealth, and it's not really affecting you. And so to see the markets being green today is something that we're all looking forward to.
Yeah, well, what was your reaction to the Federal Reserve's announcements yesterday? Obviously, they gave us a sense to say we expect a few more short-term interest rate cuts between now and the end of the year, probably 25 basis points each. But only one, and now they're focusing a little bit more on the labor side of their dual mandate. What are you following out of the Fed?
Yeah, well, they need to balance out the risk a little bit, right? Because inflation is at about 3.1% when you look at the core numbers. And so to balance that out, we need to be able to bring down some of those rates. That will make money cheaper to be able to borrow. And that'll be able to put some liquidity in the market and give people the opportunity to actually start pushing into Q4, which is historically green over the last 50 years, about a 75% rate.
Yeah, Dion, every day here on the show we follow a group of stocks we like to call NYSE notable, some of the biggest market cap companies that trade here. There is none larger in the world than Taiwan Semiconductors, and that brings me to something I know you're tracking, general geopolitical risk around the world. How does that play into investor sentiment in these markets?
Yeah, so everybody's paying attention to not only the bonds, not only the dollar, but also the BRICS nation, right? So you're looking at currencies, you're looking at gold, and you're looking at equities, and it depends on what is your risk appetite? So what we like to do is we like to mitigate risk. We like to protect our downside and be able to always protect our principal and have a little bit of equity growth on the upside.
Yeah, we talked about at the top of the broadcast here, right before the bell, that technology shares, those are the strongest performer of the 11 sectors in the S&P 500 today. With a lot of these big AI names, though, the concerns about stretched valuations. What does that mean for a market? For some concerns about a little too much froth towards the top.
Yeah, well, I think in general, technology is leading the sector for over the last decade, right? It's not a hard sell. And when investors are looking to have that growth participation, I think being able to have AI in your portfolio is very important because it's here to stay. And so I would be able to look at not only Taiwan Semiconductor, but I would also look at data centers and tech that are around data centers, or having some exposure into ETFs that are around data centers and energy as well.
Yeah, that's right. We had that big story today about NVIDIA announcing the new partnership with Intel.
Absolutely.
You know, kind of this co-collaboration spirit for PCs and data centers. Before I let you go, any story, it can be in personal finance, the economy, the broader markets, Dion, you think we should be paying a little bit more attention to? What's top of mind for you these days?
Yeah, top of mind for me is 85% of all trading is algorithmic. So people need to be informed and know that they're not just competing in the old markets. It's technology, it's data, and to be able to have algorithmic approaches to whatever it is that they're doing and not just making choices off of emotions.
Yeah, you know what I love about this show and having a guest like you? We can still talk about the old markets a bit, but do it in some modern fits. Dion Pouncil.
Yeah, keep it fresh.
Great to have you here on the show. You're welcome back anytime. Thanks a lot for joining us today. We'll talk to you again soon. All right, Todd, it's about that time of the show, my friend. Let's go for a walk. It's a long walk, though. Hey, Pete Ash is here. What's going on, man? Welcome, welcome. We're going to go. Jeremy, I had a question as I was walking. Do you think 12.5 points is a little bit too big of a spread for the Bills tonight against the Dolphins? It's a lot. The Bills are really good. The Dolphins are not, respectfully. 12.5 seems like it's a lot. You think they've got it? Buffalo's got the home match. We'll talk about shares of Home Depot here on the day, just up fractionally or so. Wolf Research initiating coverage with an outperform rating, setting its first ever price target on the stock at $4.97 relative to these levels at $4.17 and change. Upside potential of about 18 to 19%. Home Depot shares are up 7% year to date and about 30% off their April 9th lows. Todd, let's head over this way and talk about a recent IPO darling. This was a big one from our friend Tom Farley and the team at Bullish, and our investors ever bullish, at least today on the stock, up 20%. Bullish revealing it received a BIT license from the New York Department of Financial Services. That will allow the company, it says, to launch virtual currency trading in the U.S. in Q4. 11 ratings on Bullish so far across Wall Street, 7 holds and 4 buys. Folks, coming up after a quick break, the top stories in the world of fintech, crypto, and AI, plus an interview you do not want to miss with James Zhang of Sharps Technology. Much more taking stock coming up from the NYSE after this. Oh, we're so back, folks. Welcome back to Taking Stock and the floor of the New York Stock Exchange. Time now for a few fintech, crypto, and AI headlines. First up, ETH and Bitcoin both up on the day, kind of commiserate with the broader market historic performance. Next up, Google and PayPal are teaming up on agentic commerce. It's a new multi-year deal to combine Google's AI with PayPal's payments network. The partnership involves integrating PayPal across Google Clouds, Ads, as well as Play. And finally, Chinese AI startup DeepSeek claims it trained its new R1 model for only $294,000. That is, in fact, a fraction of the hundreds of millions spent by its U.S. rivals. Earlier this week, FinTech TV's very own Remy Blair sat down one-on-one with James Zhang of Sharps Technology. Take a look.
Sharps Technology, a medical device company, closing a $400 million private placement to build a digital asset treasury strategy accumulating Solana. The strategy, well, to generate reliable on-chain yield and tapping directly into the Solana ecosystem. Joining me today is James Zhang, who's strategic advisor at Sharps Technology. James, welcome. Thank you so much for joining me.
Thanks for having us.
Well, first and foremost, tell me about the DAT strategy and what are the benefits, a treasury stock versus ETF or Solana?
Yes. So Sharps Technology closed over $400 million on private placement with up to $1 billion gross proceeds and has fully deployed it into Solana, holding over 2 million SOL tokens at the moment. Now, ETFs are great. I think it's one of the most important parts in the financialization curve of an asset class. There's over 40 in Bitcoin, over 20 in Ethereum, and currently over 7 pending for Solana with approval date set in potentially October. Now, that being said, I think digital asset treasuries provide a lot more financial tools to actually benefit shareholder value. For example, accretively generating your Solana per share by raising cash through selling your shares to essentially increase your asset class. And vice versa, when you're experiencing volatility in the stock, you're essentially able to buy back shares using selling asset class. So these are very simple mechanisms, but at the end of the day, is how do you actually value it? Now, if you look at when an example, BitMine launched in July, they held about $4 per share of Ethereum. You could have at the same time bought $4 in Ethereum or $4 in the ETF, but as of today, I think BitMine owns around $40 per share of Ethereum, generating over 10x, and you would still hold the same amount of ETH in the ETF or in the underlying assets. So I think there are outsized returns that your management team can provide to you by doing digital asset treasury strategies.
And digital asset treasuries, DATs, have been in the spotlight in 2025. So tell us about the influx of DATs for a single asset.
For sure. I think DATs generally signify strong open market buying pressure, right? From the time that you come into the market, you can experience great volatility and benefit of being an early entrant. If you look at Sharps Technology, it has Solana's price is around $109 when it launched a few weeks back and has increased dramatically since then. I think some of this could be attributed to DAT's open market buying pressure of over $1 billion in the past few weeks. And there's $1 to $2 billion of signal open market buying pressure from DATs over the next few weeks as well. So you're extremely bullish that you can come in early as an entrant and essentially experience those gains for your shareholder. If you look at Ethereum, it's done over 10 billion of flows to the underlying asset just from its DAT strategy.
And when we're looking at the crypto markets, many may focus on the majors, but tell us the best way to think about Solana versus the other classes.
Sure. I think if you look at it, Bitcoin is digital gold, Ethereum is digital oil, and Solana is digital silicon. I think silicon is extremely undervalued. It's the building blocks of the internet, the world we live in, and semiconductors, microchips, which powers your phone, your tablet, and everything in between. And Solana essentially, as the Silicon Valley has grown and internet comes to made, Solana has been the fastest to 100 bill in market cap. So I think the best way to think about it is 10 years ago, you buy gold, you buy NVIDIA, you log off, you bid better than most hedge funds in the world. Well, today, Bitcoin is digital gold, is that digital infrastructure and NVIDIA. And if you look at the market cap, essentially of Solana relative to that Ethereum and Bitcoin that have been around for much longer, it's 1/5 the market cap of Ethereum at 100 bill. And 5% of Bitcoin. So every new net dollar that comes into Solana can drastically more move the price.
And of course, viewers may be familiar with Bonk. So we know that ecosystem alignment is key. So tell us about your Bonk partnership.
Yes, and the most important is that Sharps is run by a team of Solana native founders and crypto native folks. So ecosystem alignment is extremely important. Bonk being one of the largest players in this ecosystem is essentially a natural partnership. By us leveraging their liquid restaking infrastructure, we increased yield for our shareholders and the underlying asset. And for Bonk, they can increase their TVL and a lot of liquidity through Bonk Sol and their infra. Looking at Nom, one of the main key figureheads, has been extremely enjoyable to work together alongside in the trenches.
And what about Pudgy Penguins? Was this also part of the initiative?
Yes, I think what Luca Nets has done with the Pudgy Penguin initiative and their community is second to none. It's one of the few communities that has really transcended past just crypto and into the mainstream media. You look at some of their partnerships like Walmart, they really have that platform to speak to a lot of retail. So us partnering with Pudgy gives us that voice and platform to essentially educate a lot of folks on Solana that are coming into the market as the next digital infrastructure and STSS's role in this.
And of course, your strategy does rely on Solana appreciating. So tell us your view when it comes to this crypto.
Most definitely. If you look at Solana today, every metric points to it being the leading digital asset. It did 900 mil revenue last quarter to Ethereum's 300 mil. It has 7% native staking yield to that of Ethereum's 3%. And it's the fastest company cross-sector to reach 100 bill market cap, 2-3 years faster than both Facebook and Apple. Looking at price predictions and price movement, Ethereum in its first cycle went from $6 to $1,400 at an all-time high. In its second cycle currently from $60 to over $4,000-ish. Right now, Solana in its first cycle went from $1.26 to $266 in the first cycle. And this cycle is at $10, gone up, currently sitting at $230. We think there's extreme growth ahead with DATs coming out and a lot more digital asset framework. So ETH was the L1 of the last cycle, and currently Solana is the L1 that everyone uses in this cycle from transaction numbers, DEX volume, etc. So extremely bullish on Solana, even from some very simple mass market cap ahead.
And James, finally, I do want to ask you about Sharp Technologies' global strategy moving forward. Tell us more.
Yes, capital markets here in the US, but global pockets of liquidity around. We're extremely excited to start a roadshow starting in Hong Kong, Shenzhen, Korea, Japan, and Singapore over the next few weeks. So I think it's extremely important to educate both in Asia and globally on actual DATs and pipes, because there is definitely a lag in information asymmetry, and we think educating a lot of family offices and institutions on the Asia side will bring in even more capital directly to the space.
Well, James, thank you so much for joining me, and thank you for sharing your insights and your perspective.
Thank you.
Let's do it, folks. Welcome back to the broadcast. Today in the latest in the worlds of startups, raises, and rounds at this hour. First up, the Fed's rate cut this week now appears to be unlocking a bit of an IPO pipeline. Bankers now expecting a flood of filings and roadshows in the upcoming weeks. Companies are racing to go public before the holiday slowdown. Next up, Grok has invested $750 million, more than doubling its valuation to nearly $7 billion as investors pile into AI chip makers. And finally, Blacksmith, a Google Ventures-backed dev tool startup in San Francisco, has raised $10 million in a Series A just 4 months after its seed round. That is the latest you need to know in the world of startups, raises, and rounds. Every show, I love all of our guests, but especially when the guests get to do the closing bell themselves and are generous enough with their time to join us here on the floor. Let's talk with Dr. Mark Stein and Ed Randall as well, who did exactly that. Gentlemen, thank you both for being here.
Thanks for having us.
Thank you for having us.
Of course, absolutely. Ed, let me start with you. Fans for the Cure, you were down here on the floor of the stock exchange doing the bell. Let me first say, or ask you, I should say, what did the experience look like for you all to ring the bell, and what is Fans for the Cure for people a bit unfamiliar?
It's an out-of-body experience, and what an honor it is for us to be here today. Fans for the Cure was born out of my being diagnosed with prostate cancer at the relatively young age of 47. After a procedure was done to remove the cancer, on the day in which I was diagnosed, JD, I had no symptoms. I'd gone to the doctors. He said, "You have cancer." How's that? When I went into my 2 favorite words in the English language, in remission, I said to myself, there could be tens, hundreds, thousands of guys out there like me walking around feeling fine, thinking they were fine. They could be time bombs for prostate cancer. We need to get to those guys. And I filed a 501c3 called Fans for the Cure, dedicated to prostate cancer awareness and education.
And this is Prostate Cancer Awareness Month, if I'm not mistaken. What does the rest of the programming look like in terms of awareness and getting the message out for you and your colleagues?
Well, what we're going to be doing on September 25th at Yankee Stadium is our 13th annual free screening for fans and employees of the Yankees. I even bring in the NYPD that guards the stadium. And on that evening, you can come and get a PSA blood test, and for your time, we will give you 2 free tickets to a Yankees game in 2026.
No, that's terrific, and certainly something I know that a lot of people will take advantage of. Dr. Stein, let me get your perspective as the medical expert in this conversation. What are the crucial medical-based realities of prostate cancer you would want people to pay more attention to?
The reality is that most men, they don't know where their prostate is, they don't know what it is, and they don't know that they can get cancer of it. And unfortunately, every year in the United States, 270,000 men are diagnosed with prostate cancer. Tragically, over 30,000 men a year die from prostate cancer. And the thing is that if men get screened, if they take advantage of these types of programs, they go to their doctor and ask them for a simple blood test of PSA, it can be found early, and if it's a serious case, then they can be treated and cured. So our goal is to raise awareness, let men know about it, make men, sort of not ashamed to talk about their prostates, get diagnosed, get treated, and, if they need questions, then they can go to great advocacy organizations and get help or speak to doctors who know a lot about the disease. But if you don't know about it, you can't fix what you don't know. And if men don't know about it, then they can't make it better. So that's really the goal this month.
Dr. Stein, let me stay with you for another follow-up. Are there particular types of men, maybe particular demographics or men with a certain family history who might want to consider getting these sorts of tests and screenings maybe a little bit earlier than general guidance?
So that's a great question. Certainly there are higher risk groups, obviously family history, absolutely. And we recognize more and more that there is a subset of men with prostate cancer who inherit predispositions from their parent. It could be either parent, a mother or a father. So some of those same genes that predispose to breast cancer can predispose to prostate cancer also. Most people don't even realize that. Then there is a higher prevalence and a higher mortality in African American men. Absolutely need to do a better job of screening in high-risk populations. But the reality is that it can affect anybody. Somebody can walk around thinking that they're perfectly healthy and not even realize that they have prostate cancer that needs to be treated.
Absolutely. And let me conclude here with you. What have you learned most about your personal journey and how you're able to be an advocate for the space to help other men in need?
To Doctor's point, there's a 99% cure rate of prostate cancer is detected early. I am just so grateful and honored to have this organization, to be out in all over the country, to be able to tell men that they are loved and they are wanted and they are needed and they are cherished and they have a responsibility to go to the doctors. We want no empty chairs on Thanksgiving or Christmas or Kwanzaa or Hanukkah or any of those days. So I am just so committed to spreading the word of prostate cancer awareness and education. Our mission is that if you have been diagnosed with prostate cancer, we don't want any man to go through this journey alone and uninformed.
All right, gentlemen, thank you both, and continued success on all the outstanding advocacy through the whole month of September and beyond. Appreciate you both being on the show today.
Thank you so much for having us here.
All right, folks, earlier this week, Money 2020's own Scarlett Sieber sat down with Terabit founder and CEO Abdullah Al-Moayed at Money 2020 Middle East in Riyadh. Take a look.
Welcome back. I am Scarlett Sieber, and we are live here from Money 2020 Middle East. I have another great guest. I am so excited. I've got to know him a few months ago, and I've been so impressed with what the Terabit team has been doing. And so, Abdullah, CEO of Terabit, thank you for joining me today.
Thank you for having me, Scarlett. It's great to have you here, by the way.
Thank you. I'm so excited to be here. And, you know, obviously we're sitting at the epicenter of Saudi Arabia here in Riyadh. Can we just talk a little bit? But you're an entrepreneur, you've done a lot of amazing things. Why Saudi? What's different about Saudi for you?
It's different. There's a massive opportunity, in my opinion. I think that there's regulations that are well ahead anywhere else in the world, and there's also digital infrastructure that makes this economy, market, very, very interesting when it comes to innovation. We talk a lot about leveraging data for lending, leveraging data to basically build a lot of these great financial models. And I think Saudi just makes one of the best markets globally.
And when you think about you're a fintech entrepreneur, like what is the fintech scene like here? We have over 1,000 investors with us over these 3 days. So just talk to us about that.
There's a lot of so what makes the Saudi market very different is there's a lot of the work that is required that is done. I think personally, this is one of the most sophisticated markets in the world. You've got everyone on the cloud, you've got digital signatures that are already enforceable by law, you've got digital identities across the board. There's no such thing as unbanked in Saudi Arabia. There's something, everyone here is banked. If anything, they're multi-banked. So one of the things that tends to happen is you've got this financial gap that they're trying to address, which is more financial literacy, financial inclusion. And the national strategy is really set for you across the region. So when you look at something like Vision 2030 or the Financial Sector Development Program, you don't need a crystal ball per se to figure out where the market's headed. You see certain pillars that are very important, and then you see what the government's doing to enable the private sector to really play a role in bridging that gap. I think two of the primary themes that we've seen throughout over the last 5 years operating here have been really about trust and resilience. The moment you have these two aspects, then it really becomes about how you use technology to enable, and the government's really done a great job here.
That's very interesting. And sitting at the epicenter of fintech globally, open banking is a topic regardless of where we're at in the world. Obviously, you have a first-hand seat for it here. Can you just talk a little bit about what the process was like getting your license?
So we are an 8-year-old company. We started in Bahrain, got our license there, then graduated from a regulatory sandbox in there, moved to the UAE, got our license there, and now just recently over the last, I think we've been here for about 3-4 years in Saudi Arabia. The journey is very straightforward, as it is in any other market. We also operate in the UK, and I think getting into a regulatory sandbox, getting the regulator comfortable with what it is that you do, and then from there on, proving a level of resilience and maturity that allows you to graduate and go into full commercialization. The one thing about the government here and how it operates, or licensing process and how it operates, is there is a high threshold to dedication, to resilience, to trust. If you want to operate in Saudi, you need to be serious about it. It is not, you'd operate in a sandbox, but if you do get to level 3 cybersecurity maturity and things like that, that I would say are the gold standard as to how a company that wants to operate commercially across the nation needs to operate. It's pretty straightforward. They've got regulations, and within these regulations are the requirements that are out there.
Amazing. Well, that's all the time that we have for today. Thank you so much, Abdallah. Appreciate all of you watching, and back over to you.
All right, folks, that's going to do it for the show. Don't forget, tomorrow morning, right at 9 a.m., NYSE TV Live with Kristen Scholler and FinTech TV with Remy Blair will both be down here at the NYSE. Can you dance to the open? Light on economic data, but a little bit of Fed speak on the Friday. And that's going to do it. This is Taking Stock at the New York Stock Exchange, and we will see you again tomorrow.